How disciplined are you in sticking to a strategy when times become challenging? I ask because anyone can say they're focused and disciplined, and any advisor can claim to be an effective behavioral coach who gets people to take a long term view when markets are rising. But behavioral coaching poses a much greater challenge when people are panicking with fear. That's what I strongly suspect might happen in the near future. I believe advisors can be of great assistance by preemptively doing what can be done now to increase the chances of a positive outcome down the road. I mostly agree with the standard prescription of staying the course during market turmoil, and I specifically believe in maintaining a suitable risk allocation that is rebalanced to a target when one or more asset classes changes faster than others. For example, I believe people should sell some bonds to buy stocks if stocks drop materially. To me, this is more about risk allocation than asset allocation, and I say that because some conventional asset classes have become quite risky lately. For example, US stocks are trading near all time high valuations. My concern is that if my own experience of the 2007 to 2009 crisis is any indication, most advisors will likely fail in their self described mandate to act as behavioral coaches. If markets drop significantly and/or stay low for a prolonged period, investors will likely lose their resolve, and there's little that principal advisors can do to prevent it. In short, I agree with conventional orthodoxy about what the right thing to do is. Where I break with orthodoxy is in my fear that many advisors will fail to get their clients to act accordingly. That is why I moved most client holdings from traditional stocks and bonds to alternative assets over the past few years. In doing this, I'm channeling Odysseus in my own modest way. In Homer's tale, The Odyssey, Odysseus' journey home after the Trojan War presented a great challenge, resisting the temptations of the sirens. These creatures were beautiful women who sang so sweetly that sailors passing by couldn't resist their call and ended up crashing their boats on the nearby rocks as they tried to get closer. He came up with a clever plan. He had his sailors tie him to the mast of the ship while they plugged their own ears with beeswax so they couldn't hear the siren's song. As such, Odysseus was able to hear the sirens, but because he was tied to the mast, he didn't give in to their call. Moving clients to a new portfolio with a near identical risk return profile, but with far less exposure to traditional assets like American stocks that are trading at generational highs in terms of valuations, I'm attempting to pull off the portfolio management equivalent of putting beeswax into my clients' ears. My hope is that when markets get choppy, they will resist the temptation to sell because their portfolios will not be acting like most others. My hope is that they will also do a better job in staying the course because they will have avoided the exposure to things that might otherwise throw them off course. In short, I still believe in the long-standing principles of portfolio construction and management, but I'm also a realist. My job is to get clients retired and to keep them retired in the lifestyle they've grown accustomed to. Sometimes the best way to modify behavior is to prevent the natural, reactive, self-harming tendencies from ever taking hold in the first place.